Gold and silver got clobbered in the past few days. Hello everyone. Uh, let's take a look at the graphs, maybe some news, and figure out why. I mean, I guess we already know why, but let's look at a few news. So, 2 days ago, the the Fed, Jerome Powell, had a few statements to make about the economy, interest rates, and so on. At start, he was a bit dovish. He was walking a fine line. He was trying not to upset the markets too much, but in the end, everything ended up tanking, both precious metals and the S&P, Nasdaq, because at the beginning of the trading session they were up on the day. I think we can see it on a 1 hour chart, and it was, if I'm not mistaken, here. They were up before the announcement, before Jerome Powell did his statements. Then they started coming down, so there's a lot of volatility. Why did they start coming down? Well, mainly because Jerome Powell hinted that inflation is running a bit hot. Yeah, I mean 7%. And 7% is what they admit to, because if they would be using the 1980 formula, it would be a lot higher. But let's say it's 7%, you have 0% Fed funds rate, that's negative 7% real rates. I mean, it's not really negative 7% because we need to take a look at the 10-year bond, usually. And yeah, it's negative, call it 5%. That's a lot. If you're thinking about holding bonds for a long duration, I mean, it's your choice. You do need to hold cash. I would rather hold just cash, because at least with cash, you don't run in the risk of your bond prices going lower, meaning interest rates go higher on the bond. So you also you have some capital losses on your bond. So I'd rather just hold cash, because you do need to have cash on the sidelines as dry powder, especially in these volatile times. You can come in and buy dips if you want. I would not buy the dip in the S&P or the Nasdaq. I would buy the dip in good value stocks like Intel, like HP. I mean, it's a really good value stock, but I think it can come down a bit. Yeah, these are stocks that pay really good dividends, and again, you can look at foreign stocks in Europe, in Asia, but that's, you need to do your own due diligence on buying stocks. But I do recommend having some cash on the sidelines, not in bonds. I really don't recommend that. I would really recommend buying the dip right now in gold and silver. I kind of did a video 2 days ago, right before the metals fell. I had some guy commenting on my videos, is if silver is gonna go down. I kind of said, well, you know, it's a bit, gold is at resistance at the 1850 level. We have this pretty clear downtrend, but it's just an imaginary line. But the price did come down, and we all know if gold comes down, silver will follow, and that's exactly what happened. I usually like to buy silver on the dips, especially when the RSI is in this very oversold area. So right now is not below 30. We are currently at about 39 on the RSI. So we can come lower. And yeah, we are at the bottom of the range in this past, how much was it? Of probably 18 months, something like that. So this range was bought a few times, but now the momentum is kind of negative. We can see the silver was rejected at the 200 daily. That was a level I didn't really see before. I had some other moving averages pulled out, and yeah, it was rejected 2 times. Again, I think this is a good buying opportunity. Again, I would not buy the SLV. I would just buy physical coins and you know just hold them long term. The premiums are pretty high. For example, I think my last purchase was somewhere in this area. I remember that after I got my purchase, silver continued to move down, but the actual price of the physical stayed pretty much the same. So yeah, premiums are still high, but this is just because of demand. There's a lot of demand for bullion, for investment bullion. So Jerome Powell hinted that they will start raising interest rates in March, but they're gonna raise it by 25 basis points, and inflation is at 7%. I think the projection is that by the end of the year, the Fed fund rate will be at 1%, and at the end of 2023, it will be at 2%. But if inflation stays at 7 or goes even higher, does that really matter? Well, not really. Not for the small investor. For the average Joe, it doesn't really matter. The inflation is still gonna eat at your purchasing power. That's why I recommend buying physical gold and silver, especially gold. I mean, it's a lot less volatile, but silver is extremely undervalued. I mean, silver is below its 1980 high. Think about that. It's really, although yeah, this only lasted for 2 months, so I really see the 1980 high at around 22, because this was very briefly lived, but still it's very undervalued compared to gold. Gold is a lot higher in nominal terms. Gold and silver are a lot lower when you adjust for inflation. That's why you should buy them, because they seem cheap. And again, you should buy good value stocks. Don't buy Tesla. I mean, you can see that I have 2 lines down here. This is the, all right, it's on my watch list zone, but I would buy below 76. So if you are in Tesla right now, I recommend you sell. Sell everything and buy value stocks, or hold cash and buy dips in value stocks. I really hope Tesla like crashes 95%. I really hope it's so, because it's way overvalued and it's not out of the question. If we look at Amazon back in 2000, Amazon was at 106, 110, 110, something like that, and it crashed 95%. Think about that. So it's now Amazon obviously is very profitable, but still expensive, but Tesla is just way overvalued, way overvalued. So yeah, Tesla could crash 95% and then slowly grind up, and in the meantime actually could have the potential to become a highly profitable company. But right now it's way overvalued. And what I mean by way overvalued is, look at their financials. And again, I'm going off on a tangent, but market cap 822 billion. PE should be a hint, to 267, and anything about 20 is considered a bit expensive. But what I like to look at is the free cash flow. So we can see that in the last, I mean, this is so bad. I would have expected that they would increase the free cash flow a lot compared to 2020. But no. Yeah, so they have 2.5 billion dollars in free cash flow. Multiply that by 20 and it would give you a starting point for the market cap that you want to pay for the company. So that's about 50 billion, right? 50 billion, our target, Tesla market cap is 820. So for it to drop to our 50 billion target, it has to fall 94%. So this is 6%, 100 minus 6, 94%. So call it 95. That's where I would buy Tesla. Right now is highly overvalued. Right, so Powell said they will start hiking interest rates in March and also end the asset buying purchases in March, and maybe start actually tapering. And if we look at the balance sheet, total assets, it's at almost 9 trillion. So remember back in 2018 what happened to the stock market? It had a pretty good correction, and then you might notice that come on, work, that they started buying assets again before the you know what crash happened in March of 2020. Well, why is that? Well, because of the repo market. The interest rate spiked at around 10% in the repo market, and the Fed had to step in. And this is the actual sign that we would have had a recession with or without the you know what. Yeah, so I'm curious if they're actually going to, I mean, they will start selling most likely, but it will be interesting to see how the markets react to that. Very interesting. So again, if the markets come down, usually on those crashes, silver goes down as well, because silver is about 50% of silver demand is industrial. So if economic output is lower, that means that there's less demand for silver. So speculators would sell silver. And also, this is the spot price is not actual silver, it's just derivatives. Just like in the meltdown here, investors are selling their silver, maybe this was a long squeeze, who knows. But usually, let's say I'm buying the S&P 500 on leverage, and what happened to the S&P 500 back in March? Well, it tanked. Well, I need to cover my losses on my leveraged bets on the S&P. What do? Well, I'm gonna sell silver. I'm gonna sell gold. So that's what's happening to the spot price usually. So yeah, targets, I can see gold maybe going even lower. Again, you can go into oversold, so RSI below 30. It can go even lower in the next few days. Nobody knows. Again, this is just, I cannot really predict what would happen next. But if gold comes down, silver will also come down. And again, momentum is pretty negative. We can see the 200 daily is on a downtrend. That means momentum is negative. It's not yet oversold, so silver could go even lower. Yeah, there's this triangle pattern here, and it could go low from the apex by about, let's say, at 850 at some point, and that's around in this area. So I'm not saying it's gonna go in the next few days in the 18s, but let's say this negative momentum is going to continue. We can see the 200 daily could do something like that, and price could trend lower in the next months, especially if the Fed is gonna actually raise rates. Of course, it doesn't make sense to it doesn't make sense for silver, for precious metals to fall, because especially if inflation stays high. But investors are still going to sell, even though it seems irrational. But at some point they will wake up, I think. Again, if we look at gold on a longer term chart, there's a really nice cup and handle formation. So it's, again, it's a nice technical formation, but it's not a guarantee that after this handle the price is gonna explode. There are no guarantees. The probability is high, but this handle could continue to go lower. You know, and looking at this longer term chart, I could see gold in this range, you know, and if gold comes down to this 1680 area, or even worse in this 1600, then we could see silver going to about $18-19 per ounce, and that would be an amazing buying opportunity. Again, I'm bullish long term, but short term, because the market is irrational, I could see metals go lower, and my plan is to take advantage of that and buy the dip. All right, thanks for watching, and I'll see you next time.